Hey, Urgent Alert traders, here is your weekly portfolio debrief or brief, and also our new trade. We're going to be talking about a hedge today. Absolutely time to hedge. You guys who have been in my live trading events this week know that a little creeped out. Not necessarily over macroeconomic events, earnings, or anything like that, but there are world events, folks, that can go bump in the night and cause our portfolios to implode. Not a good thing. They're going to recover unless it is a nuclear war on the Korean Peninsula or in Japan, or North Korea can even reach reports I'm seeing Hawaii now. So that's super. So we either cave like Clinton did, Bush did, Obama did, and when this guy fires bottle rockets, you give him money, you give him food, and then he goes away quietly, right? No, he doesn't. He takes that money and builds bigger missiles so he can get more and more from you. It has to stop. China's proposal is, well, they were kind of on our side, like, wow, this dude's crazy, we're going to cut off coal. And then now they're pivoting to, well, why don't you guys call off your annual military exercises that you've been doing for 50 years, and maybe he won't be as crazy. Really, China? So this stuff worries me, folks. The other thing that's starting to worry me right now is the O into fear, and that's oil. So oil broke 50 for the first time in a long time. But this has been a nice orderly descent here. I said we'd sell off on the inauguration. It'll be inauguration. I was wrong. I said by the inauguration. The damn State of the Union. I was wrong in the sense that it was a short squeeze, but after a short squeeze, you what? Everybody who was short and got squeezed gets re-short, and then this happens. Trying to hold that 23, 65, 70-ish line here, and if we don't, it's look out below. Okay, let's talk about the lookout below. I want to put a hedge on, man. We're going out about 3 months, probably out to May, and you see this, before this is the election rip your face off rally, and then the hangout is this guy for real for 2 months before we went up. The hangout is this guy for real, I think would be the implosion point. We'd head all the way back to this if something bad happens. So, and there's a lot of potential bad. I'm not going to waste all this airtime going through it all. That's what we do in the live trade brief. So, let me knock out a portfolio debrief of our current positions in the Urgent Alert portfolio, and then we'll get to the new SPX hedge trade. Okay, for Disney, hey, it's up $5,000. It used to be down $5,000. That's why in a long call diagonal with a protective put, if your strategic mindset and your commit criteria are still sound, why get out of it? Many of you would have ejected at about a $5,000 loss. I'm like, why? Look at what happened here. That's about where I got in. I'm like, okay, Disney's not going to zero. If it does, what do the theme parks, become squatters camps? Of course not. Look at that rip your face off rally. Stayed with it and turned the trade around from being down 5 to being up 5. Not also by the stock having this rip your face off rally, but by having the ability to sell those front month upside calls or front week as desired. So here's my current position. I would look at a Jan 19 on Disney, folks. And I love being able to say this. If you don't know how to do a long call diagonal with a protective put, all you do is you go to the home page. You go under the training materials tab, and I gave you 490 training videos, not materials, training videos, and you can watch my video on long call diagonals with protective puts or synthetic stock. Okay? So my existing position is this. I am long 10 of the Jan 18 70 calls and long 10 of the Jan 18 80 puts. Up here at 111, I guarantee you those 70 calls are deep in the money, 1 delta meaty calls. This goes up a buck, these go up a buck. Okay? Let's take a look at the short-term picture, though. Their Star Wars franchise is crushing it. Disney's doing great. The only thing that sucks with Disney, obviously, is their ESPN property. They're cutting, marquee hosts. They're getting rid of. I think we're in a hover period, a consolidation period. They're still trying out to figure out their succession planning. Iger said, "Well, if we got no skipper, I'll hang out for a little bit." That it needs to be more formal than that. Look at AIG getting rid of Ben Hancock. When companies don't have a commanding officer and an executive officer. As soon as the skipper has a change of command, the XO fleets up to be the skipper. I've worked with so many companies, when they look at me and they're like, that's a brilliant idea. But most of these imperial CEOs have the hubris of, I'm not going anywhere. I'll be the CEO forever. Hank Greenberg at AIG. How'd that turn out for him? I like the 112s out a couple weeks on Disney. So let me take a look at that. 10 of them. I'm going to go to options. And that's out the next expiration. I'll do next Friday. I'm going to keep them relatively tight. I'm going to sell 10 of next Friday's 112 calls and bring in about $500. Market makers are at lunch right now, having their tin sandwiches. Well, I'm going to go in and de-ask them. Maybe they come back after their tin sandwich and hit my offer. All right, Disney. Couple FXI positions. China. You guys know everything that's going on with China that I know, maybe even more or less. I'm long 15 of the Jan 18 25 puts and the 26 calls. Okay, so this is a long call diagonal. And then here is I'm kind of drag racing this. Remember this, guys, when I put these on. So that's a long call diagonal, up 850, 5%. This is synthetic stock put on around the same time that's up 218% for $3,700 gain. That's the difference, folks. You can see potential gains quicker with synthetic stock, but you pay up for it up front. The long call diagonal, you can eventually start seeing some pretty cool gains. It takes a little bit of time, but it's cheaper to get into initially. God was an options trader, man. He ain't going to give you both. You're going to get one of those. So I have synthetic stock that I put on at the 32 strike, and with the stock, the ETF up here at 37.39, obviously it's profitable. There you go. That P&L diagram is long stock, and there's the stock ETF. You guys know what I mean. There's the protective put. So I have 10 of these, and I got 15 of those. So let's take a look at the chart. We know what's going on in China. A little slowing of some economic data. They're trying to play grown-up with North Korea. Good luck with that. So I got 25 contracts. I'm going to do the 38. It's pretty close to at the money, out a couple weeks. Not out the next Friday. Let me give a little bit more altitude. 2 weeks. And the 38s. Yeah, I like the 38s. 15 of them, or 25, sorry. Since I have two positions, right, 10 and 15, there's a little bit of a mid-market, and then I'll fire those off. $575 in about 2 weeks. Again, take it in money, man. Take it in car payments each week or each month. JP Morgan financials, love our JP Morgan. This is blowing away our accelerated retirement JP Morgan trade. $29,000 trade, folks. And it is the gift that keeps on giving. For those of you that are in this one, it is just a reminder, it's 10 of the Jan 18 40 puts and the 42.5 calls. Printing money. Here's the newer JP Morgan trade that's about 3 months old. $8,300. And this is a what? It's a Jan 19 position, folks. You don't think this one's going to catch that other one? The JP Morgan trades and the Goldman Sachs trades, just banner, man, and they're going to keep going up. We might get a pullback in financials eventually, but when you look in the book of bullish for financials, the first page has everything that we're doing right now. Literally, I feel like I'm sitting in finance class going, if all of these things are happening, financials are going through the roof. So they are going through the roof. Have a problem with some of those things? Might see a little bit of a pullback, but we'll be ready for that. Or we just start selling front month upside calls as it goes down a little bit and keep our longs. We'll see. 10 of the Jan 1960s and 10 of the Jan 1965 puts. Okay, so what's that? 10 and 10 is 20. Financials took a little bit of there's your inauguration. Wiz, you're wrong. People bought on that thing. I'm like, he didn't say anything different. Actually, he did. He said it less Trumpian and more presidential. People thought, yay. No, folks, that's called a short squeeze, man. As soon as the short squeeze got over, whoop, we went back to what I said it would be. We would sell on the State of the Union. So let's take a look at that high. 94. How many did I have of these? 20. So let's go with 20. Let's go out to that March 24th and take a look at the 94s. Any premium in those? Yeah, 54 cents. Going to sell 20. Create order. We got a mid-market on that one. And we'll fire that one down. $1,000 in 2 weeks, averaging $5 a week potentially on that position. And then all these phantom positions, ignore XLF. Guys, I'm not going to beat a dead horse. If I were capital limited, I'd be deploying into individual financials at this point. Goldman Sachs, JP Morgan, Morgan Stanley, AIG. Hancock leaving today is bullish. AIG's up 1%. If they get a new skipper, maybe break up into 3 business units or independent companies, might get back in AIG. But XLF, kind of a yawner for me. It's up $1,600. It beats a stick in the eye, but it's also the cost of capital. It obviously beats a savings account, which interest rates, which are going up next week. But I'm short 15 of the 24.5 calls to Friday. or at 24.85, especially with a little bit of a uptick today. Disaster puts at 17 and long Jan 18 calls. So I got to, oh my God, your short calls are in the money. And let's roll them up and out. Okay, close adjust. Roll up and out. Add edit legs. Buy to close 15 of Fridays, 24.5. Sell to open, let's go out to the 24th-ish, the 25s. It's a debit. I roll for debit. It's less of a, quote, loss. And you know I like using the air quotes because you're making more on the underlying, deep in the money, 80 delta calls going up in value than you, quote, lost on the front month calls. It's math. Here we go, folks. Hedge time. You got to be freaked out, man. First of all, let's look at one of our altimeters here, the VIX. We had almost a 10 print the other day, or last week, a 1094, man. With everything that I brief you guys on, I try and scare the shit out of you for a reason. So when it doesn't happen and great things happen, we can go, we're even happier. If I sat here and blew smoke in your face, and then the world ended and we weren't ready for it, I'd be out of a job. I'm not. I've been doing this for about 25, 26 years, so we got the experience. This ain't my first rodeo. I'm creeped out. A lot of heavies are going. There's no way with all the billions I have in my hedge fund that I could deploy capital up here. It's just not smart. So we're getting, I use the term hypoxic, right? The top of Mount Everest. Hey, let's take our oxygen mask off so we can take a picture. In 30 seconds, they're hypoxic and they drop dead. There's little air up here and there's little room for error, okay? I told you that oil and maybe a couple bottle rockets out of North Korea or Iran in the wrong place would cause this thing to go down. It ain't because he's reducing corporate taxes. It ain't because he's gutting Obamacare, which is an instant $1 trillion tax cut to America. It isn't because he's gutting financial regulations. It isn't because the Fed's slowly raising interest rates because they think these things are good. Market ain't going to roll over on all those, folks. It's going to roll over on something else or a black swan. You guys know what that means. You've been around for a while. So what do? Here's what Wiz is doing. I could just go back out in time and buy some puts. I hate doing that. It makes my skin crawl. So looked at this morning, long and hard. Now let me give you my 5 minutes on a hedge versus a trade. If I am trading a bear put spread, when I say the word trade, I want it to make money. I don't want to lose money on a trade. On a hedge, I don't give a shit. This is my USAA Auto, Home, and Life every month that helps me sleep at night. Okay? This is a hedge, and if you're like, well, Wiz, I don't want to potentially lose $5,000, then you don't do it. Me, I want some protection for this portfolio. Okay, so here's what I'm going to do. I'm actually going to buy, and everybody strap yourself in your seat, I am going to buy a debit spread, a bear put spread. No, it's time, man. And again, folks, I'm making light of this, but you guys know me. You have to shift the tactics for what's going on, man. Right? Let me just add edit legs. I think I did 50 of these looking pre-market. You know, if all you're walking around with is a hammer, everything looks like a nail. Not here, folks. We have 32, 35 options tactics we can do at any one moment. This is one of them, and this is the moment. I'm going to buy 50. Why 50? Give me a minute. Of the May 17, why May? I need about March, April, 2.5, 3 months of protection. Something's going to happen in the next 2.5 months, folks. The Korean thing just ain't going to stumble along with him continually lighting off bottle rockets. Iran, their naval exercise, all that stuff. China's still building their islands. Russia, what the hell's Putin doing? The deep state here. Trump, holy Christ, they can't even, Spicer yesterday couldn't confirm or deny that Trump is the subject of like some sort of investigation. What the hell's going on? That Manchurian candidate Obama left an absolute Claymore mine behind for a reason. He was convinced that Hillary was going to win, and even out on the stump, he said, what? You're voting for my legacy. His legacy got decimated, and if you think he just smiled and went on his way, you don't know excuse my French, you don't know a guy from Chicago and from where he's from in Chicago. Please. So all these holdovers in the intelligence agency that are leaking stuff that should be shot for treason, when we find leakers and if they're convicted of treason, they should be executed. Bring that back and let's see if we have some more Snowdens. Put a bullet in their chest publicly, and this is what we do with people with treason. I'm not messing around, folks. Oh, that's not civilized. Is it civilized when we leak all this stuff and sources and methods are compromised? We lose steals or we lose operators in the field. I know for a fact this has happened. And I wouldn't even tell you over a beer because it's rant complete. It's bad. And I'm nervous. So let me take a screenshot of this. And when I get nervous, you should be terrified. So short term, but guys, at the end of the day, even if we have an end of the world type of moment, the financial tsunami in 2008, man, people thought that was it. That was the big one. The Fred Sanford, I'm coming, Elizabeth. It wasn't, okay? And remember, on this debit spread, I got to do kind of the walk on up. I ain't going to get filled at mid-market, so I'm just going to go mid-market now for analyze purposes, but you got to come up here. You got to do the Starbucks walk here. Stretch your leg for 20 minutes and eventually try and get filled on this edge. Now let me click analyze, and it's going to look weird. You ready? Max potential loss, we always look at first, $5,500. All right, Wiz, that's right in your wheelhouse. Yeah. Oh my gosh, we could make 20 grand on this? Yeah, we could. If the market implodes below that January or December, January plateau. That would be the next level for me if we do have a sell-off where we'd either hold it or not. But now look at the at-the-money metrics. There's an 82% probability of losing that $5,500. That's a pretty high probability of losing $5,500. But folks, along the way, if this thing, a month from now, Wiz is wrong. Oil steadies and cream of some young guy and the Ayatollah become best friends, and we start going up again, then close it. No sense to sit here and just with your thumb up your nose and say, well, I'm just going to leave, set it and forget it and just lose the $5,500. Now, if the market starts going up, roll it up or close it. Wiz, I appreciated the thought around the hedge. It made me sleep better at night, but now we're having to rip your face off rally. Then get out of it. The odds of making $19,500 is 17%. Very low. But if you're making 19.5 on this trade, that means all the other things are blinding red. This is a blinding green. This is a blinding red. But that's how a hedge portfolio looks like. I call it like a submarine console, right? The hunt for Red October. There's some reds and there's some greens. If you're all red or you're all green, you're doing something wrong. If the market's going up or going down, you need a hedge in there, and this would be it. Okay, the break even is just below 2,300. So again, this is a hedge. It's not a trade. If I was trading and I was bearish, I'm cautiously bullish, guys. So this should answer your question to everybody who's new or in a test light going, what the hell's the word cautiously mean with him? It means exactly that. I am cautiously bullish. Okay, cautiously bullish. This takes care of the cautiously. Now I can sleep better at night. If I lose the full $5,500, will I be pissed? Nope. If I lose the full $5,500, will I go, yeah. But I won't be pissed. If you're going to be pissed, don't do this trade. If you're going to be like me, it worked. It was a hedge. I could have made an extra fit. I could have used that money. No, I don't do that. I shrug and I move on. And I'm happy. So I'm probably going to have to maybe walk it on up a little bit. Starting where? I don't know, $1.45. Let me grab this, and I'm going to send out a text alert right now and also an email alert to the people who have SMS issues. Guys, one of the reasons is it's mainly Canadian people. A couple of the Canadian carriers do not, unless you have a 10-digit number now, it's a new rule. Unless the text is coming from a 10-digit number, they think it's spam. That's why you aren't getting them. So that's why I have to jump into my broadcaster and send you the direct email. Somebody got confused the other day, like Wiz said the email comes out right away. No, the email with the images and stuff like that in this video takes a little while. The email that you're confusing it with is this one. Folks having SMS issues, I put it in here right after I send the text. That's it. So don't confuse emails here, guys. Somebody wrote Annie like, hey, he said I got the email right away. No, the SMS problem people get an email right away with just the text, like a text alert. The big one with me typing and inserting this and images and video comes out eventually, okay? All right, so I don't need to sit here and you need to watch me do this. I'm going to be doing a live trading session after the close today. I'm going to be talking about this. So since you already heard all this, you don't need to attend. So you should be good to go. I also in today's sit rep talked about the weekly options bull put spread. Here is the weekly options portfolio. Expired, canceled. So I fought for $1.15, $1.20, $1.20, and $1.20, and never got filled, guys, on the 2360, 2365. Watch the sit rep today because we're right on the edge. We're at decision point, okay? And I talk about either getting out for a small loss or taking a lucky strike and waiting for the non-farm payroll. Watch the sit rep. I'm not going to take up any more airtime here, okay? All right, guys, have a great rest of your day. Happy hunting. Make sure you hedge. God bless, and I'll talk to you guys in the next Urgent Alert.